What's going on, everyone? Today, 74% of the S&P 500 closed up in the green, and we have some great information to cover today as the stock market is continuing its rally, posting its sixth green day in a row, and we have a lot to dive deep into today as May has been green for 9 of the past 10 years. The US is reportedly very close to signing its first trade deal, and while all of this is happening, we're starting to see some of these effects from the tariffs start to really take hold as the largest port in the United States by container volume, the Port of Los Angeles, is warning of a 35% drop in volume next week, and at the same time, we are seeing consumer confidence plummet to its lowest level since 2011. We have a lot of great information to cover today. We're going to be covering what you need to pay attention to and the top stocks to keep on watch. Tom, let's not waste any time, and let's get right to it.
Yeah, the overall market had a pretty good day today overall. The SPY ended up ripping above that recent high that we've been looking at 553.50 and ran up to around 555 before going flat at the end of the day. There were some comments made that really started to push the market higher here, but I just wanted to take a step back and say, hey, this is some great price action to see ahead of some of these big earnings coming up this week. I know a lot of people have been worried about Microsoft, Meta, Amazon, and Apple reporting, and we'll definitely talk about that a lot more as we go forward here, but we are starting to see a little bit more optimism in the short term. You know, while the market hasn't necessarily been blasting off like it did on Thursday of last week, it has been slowly chopping higher, and we have some pretty good data that shows that generally whenever the market does well over, let's say, a 6-day period with the S&P 500, we generally see some pretty good returns over the next following few weeks.
No doubt, and it's great to see moves like this. Like you mentioned, the forward returns are pretty awesome, and one thing that I really like about this data here is, especially if we look at, like, let's say 2 weeks out, we can see that, of course, the data is green 75% of the time, and the average increase is 1.68%, which is really great. But when you look at the individual years, you can see that we are seeing some returns as high as like 3.4%, 3.1%, and even like 4.56%, which are just great by themselves. But even if you look at the situations where the market only rises a little bit or is even red, it's not like those years are that bad. So at least by looking at this data, you know, the market is definitely strengthening quite a bit, which is awesome, especially heading into earnings season.
Yeah, 100%. And a lot of people in the short term are like, okay, can the market really keep going up in the short term? And we've seen a lot of data just like this, kind of suggesting that there could be some more bullish price action coming. But of course, anything can happen. Trump could come out and say, hey, China screwed us over or something, and then the market ends up tanking. So always be ready for that. And then we even have some data. You know, we're about to kick off May. May has actually been green 9 of the past 10 years, which is fantastic to see. To have a 90% of the time, being in the green in May, that is great numbers there, Mike, and it just helps fuel the overall, I would say, a bullish rally that people are looking for to come as we start to kick off the spring and the summer here.
Definitely. So whether we're looking at either of these two data points or even some of the other recent data points that we covered in recent videos, there are a lot of signs pointing to a bullish market. And really the only major risk is if Trump says something crazy here and, changes the situation at hand. And, like we mentioned in the intro, we are starting to see some of the effects of these tariffs start to bite into the economy and just the market in general. For example, we could see the Port of Los Angeles says that shipping volume is set to plummet 35% next week. So, these are like some risks to keep in mind. And I think it's going to be extremely important to see how these, the effects of these tariffs continue to impact the market and the economy as weeks go on, because, this is like where all of the risk is at right now.
It really is. And I'm scared that we're going to start to see this spill over into other things. I know yesterday we talked a lot about Temu and Shein and a lot of those prices starting to change. And even today, it was kind of funny. Amazon had some weird things go on where Bezos had to end up doing a call with Trump, believe it or not. And we can see Amazon stock was falling down in pre-market quite a bit. There was some talks about them possibly listing tariff costs on parts of their website for certain goods and stuff. But Amazon ended up saying that was kind of bogus and they didn't even approve that anyways. So kind of a weird report. But again, it's something that where we're seeing weird headlines and things with tariffs starting to affect these companies a little bit more. But I think it's definitely more important though to see, like, let's just say the Port of LA with their volume plummeting 35%. That's definitely a scary sign. And I know that the last time we had the trade war with China in 2018, 2019, we heard a lot about these ports having certain issues and problems. And even with COVID, you hear a lot about these ports because obviously the US does a lot of importing.
Exactly. And, there's a lot of good happening in the market right now, but it's just important to also pay attention to the risks at hand, because if you don't, then you can be caught off sides pretty badly. So that's why we cover topics like this. They are important to pay attention to while it's, nice seeing all of these stocks just rip to the upside. But some other somewhat concerning data that I saw today is that we are seeing the highest percentage of consumers expecting stocks to go down over the next 12 months right now. And we can see by looking at this chart here, 48.5% of consumers expect the stock market to be lower over the next 12 months. This is the highest reading since October 2011. So, it basically shows that people are, pretty pessimistic right now. But of course, that doesn't mean the stock market has to fall.
Yeah, definitely. And I think in the short term, we're kind of looking at a situation where I think people are very pessimistic, obviously. And if we go to the SPX and, we go to a daily chart and we zoom out, we are seeing a pretty good recovery though from the bottom. So in the ultra short term, it seems like we're getting a little bit of relief coming in here by the market. But at the end of the day, there's still that outlook and people are kind of waiting for these tariff situations to start to hit and affect the economy a little bit more. And as that starts to happen, like we showed with the ports, and even maybe with some of those other companies like Temu and others, we could start to see some things take more of an effect. And I think that's really what people are worried about here, Mike. But very interesting chart to think that 48% are expecting stocks to go down over 12 months. That's one hell of a high number. And, I know you mentioned 2011 here on the chart. I mean, it's almost like up in the 2008 categories. And, let's be honest here. If we go back to the SPX and we go to the daily chart and we go back to let's just say 2008, the market dropped a lot more during that time than it did during this pullback. And we're talking a 57% pullback. And then right now we're only talking about, let's see, what was it, 21%? Yes, 21%, very close to that. So not even close. I think people might be overblowing this a little bit.
Yeah, and when everyone's, shifted on one side, if everyone's super bearish, then oftentimes that brings some of the best buying opportunities, and same thing in reverse as well. So good stuff there, and it's just something to pay attention to and, be cognizant of. But in some other, good news today, it looks like the U.S. is showing some pretty good signs of getting closer to getting their first trade deal done. Tom, what's going on here?
Yeah, it's pretty funny. Today, Commerce Secretary Lutnick came out and said that a deal is done, but waiting on approval from an unnamed country's leaders, and he would not name the exact country, and everybody was trying to guess who it would be. I'm guessing India. A lot of people said it could also be maybe Japan or South Korea, as well as maybe a couple others. A lot of people were throwing things around, but in his own words, he said, "I have a deal done, but I need to wait for their prime minister and their parliaments to give it its approval, which I expect shortly." So very interesting there. Sounds like they're very close. Besant did come out later this afternoon and say no deal is done until Trump announces it. So I don't know. I guess we'll definitely hear it from Trump if this ends up happening, but we're pretty close, it sounds like, to a fairly large deal. And this was also something that helped fuel the SPY this afternoon.
Absolutely. And if we look at that SPY price action, we can see that we saw some great price action to the upside upside right around the time this news hit the wire, which is great to see. And I do like to see developments like this because, as the market has just been getting destroyed over the past few months, some of the key risk has been how this trade war will play out. And when we start to see deals get done, it eliminates a lot of that left tail risk, we can say, and just is good in general. So I do look forward to seeing how this news develops, and hopefully this could be like the deal that kicks off the rest of deals to come.
Yeah, that would be awesome, and we might get a good string of them coming from that. And of course, anything with China would be huge if that is announced. But even these companies or countries like India are very influential, and we do a lot of manufacturing and stuff there. We've heard about Apple potentially switching manufacturing there and other things. So this could be a very big deal on that side, and traders definitely loved it. And if we see more like intraday price action like this, keep your eyes out for the headlines. There's been a lot of news and headlines causing these good breakouts in the short term.
Sounds good. So, Tom, we're looking at SPY right now. It has been on a 6-day green streak. There's some good momentum in the short term. What are the key levels to watch for tomorrow in both directions, and what are you seeing on the charts?
Yeah, we were looking at this channel today on the SPY, and what we really saw was a good breakout of the recent.
If you don't like guessing currency trends but still watch the market, then this Bank of America update is for you. Bank of America now expects the pound to soar to $1.43 by the end of 2025. That's a big jump from where it is today. And they're not just talking, they filed a current report to show they're playing by the rules and staying transparent. So is it time to watch the pound? Stay tuned for more finance updates.
The Trump administration is contemplating significant changes to Biden-era artificial intelligence chip export restrictions. This could mean replacing the current tiered system with a global licensing regime. The administration is also considering lowering the exemption threshold for NVIDIA's H100 chip orders. Tesla's stock faces pressure as it delays its sport utility vehicle debut following a fatal accident. Additionally, first quarter results showed significant declines in revenue and earnings, raising investor concerns.